Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. I tell you, when I saw the markets on Monday and Tuesday, I was thinking to myself, oh, this could be an interesting cattle call if this trend keeps up. But lo and behold, we got some good green on the screen. So some bit of excitement as Brad is clapping. Good excitement that has come into this market trade. And we're going to kind of take a look at what has happened in this cattle market. What caused the turnaround after the struggle bus we were on earlier in the week? Where are the bids at? And really, how close is it when packers are needing the cattle? Or is there still a spread out there? We're going to look at that and a whole lot more as we dive into this week's market so far. And as I mentioned, Brad Kooima is joining us. Kooima and Varilek out of Sioux Center, Iowa. So let's talk about the fact that Monday and Tuesday, kind of a struggle bus, Brad, and nice to see what we're seeing on a Wednesday trade.
Well, I tell you what, Susan, I couldn't help but think, by the way, thanks. I get a kick out of doing this. Thanks for having me on.
Thank you.
I couldn't help but think what a different place we live in from the last time we did this a week ago, right? Because certainly what happened over the weekend with this Hamas attack in Israel had a huge impact on our markets here, especially on Monday, but to a lesser degree yesterday as well. And, you know, I think we've talked about this, and I won't beat it up, belabor the point, but the old guy in the room here will tell you that uncertainty is bearish cattle. You can argue with it all you want to. It is. And do I think it's fair? No. But what happens is the long speculator freezes up. He doesn't like uncertainty. He doesn't like, you know, what if this turns into more like a September 11th deal? What if it spreads? What if there's a terrorist event in the U.S. and then people don't dare to go away, and, you know, on and on and on, right? Of course, hopefully that doesn't happen. So that creates that kind of downdraft, lack of buying, call it whatever you want to. And then when you're at a level, which frankly is, you know, it deserves to be here, don't get me wrong, but at a level that's historically very, very high, you know. So I couldn't help but think, though, this morning, it was funny, you know, if we'd have done this program at 8:30, the question of the day I was asking folks around me was, okay, so if we take out last week's lows, do we have to go with it with the idea we're breaking out to the downside? Or do we look for, like my partner Joe pointed out, you know, an objective on the chart that was made from that gap that we had a week ago was within a tick of our low day today? You know, or do we find support there, or maybe at halfway back at 183.95? I'm talking about December cattle, you know, with the idea that this thing is way too oversold to be bearish. We just broke $8 and we're statistically very oversold, you know. So I guess, you know, we were sitting here trying to prop each other up and like, well, it's too oversold to sell it. This thing's probably going to bounce. Cash market feels like it's all right, but we hadn't really had a test of the cash market yet either. So it was like cattle are. I tell you what, it can spin on a dime.
And that it did. Are we oversold?
Very much so. Stochastics is a good tool for cattle, maybe not as good a tool for corn, but coming in this morning when you've had stochastics readings of 10 and 17 when the parameters are 20, that's anybody that knows that stuff will appreciate that. But I mean, that's a sign that you're getting close. Sometimes it takes longer than you want it to, but that's getting close to buy time. The time of year, seasonally, this is a better time of year where typically you'd be better off buying it than selling it, of course. But, you know, as the old fundamentalist here, I know I've talked a lot of technical stuff today because you have to, but, you know, part of me is still tried and true old fundamental type deal. And so I was really had a smile on my face today when it seemed like it was the fundamentals. It was the cash is king. It was that part of the thing that I thought turned the market from quite a bit lower to steady and then better. And then the cash news actually, as even between the close and when you and I are visiting, is actually getting a little bit better as well.
So how close to the knife is the packer at this point?
Depends on what and who you believe.
Okay.
Yeah, I know that there are some cases where cattle that had been scheduled for 2 weeks out all of a sudden got asked to be delivered the following day, or even in some cases the same day. So I think that there are some packers that have allowed themselves to get a little closer to the knife than they thought. And hey, you know, maybe they had the same approach that I was describing in the first 3 minutes of our visit. You know, well, what if? You know, what if this is a cataclysmic Armageddon type event that's going on? And what if we see a big market collapse? They don't want to have any more cattle inventory out there than they need to either. So it's, you know, it as difficult as it it is for a producer. And don't get me wrong, I'm not a big sympathizer for the Packers. Anybody that knows me would know, but they've got to make difficult decisions too. So I think that the Packers getting a little closer to the knife. The number of cattle that were negotiated last week, I thought was a positive step. And so much to talk about today. So it's October, right? And every time there's a delivery month, it seems like it's not a coincidence, but when there's a delivery month, there's always a few more captive cattle the first 10 days or 2 weeks of the month. And then after that, they have to kind of get after it again. So now we're in that get after it again stage, I think, we're to the 11th of October. And so they've used up some of those formula and extra contract cattle that they had for October, and maybe they got to play ball. To me, the supply thing, in my part of the woods, which is Northwest Iowa, we are so much more current and so much less cattle here than we typically have in October that it's people aren't going to believe me when they tell me. I think it's a third or less of what normal is, but that's what it is in my opinion.
So it sounds like these, as a cattle producer and feeder, you're going to be in the driver's seat and have control of which direction this truck turns for a little bit, maybe?
I'd like to promise that. Of course, there's no such thing in the line of work I'm in.
Right.
But yes, it feels like that. And we've done it because of effort, I think, that a lot of us have made, and that we are extremely current. We're negotiating for a few more cattle. We're not letting these guys just run all over us. Often this time of year, we'll have the exact opposite of what we have in my area, where you have the farmer fed calf that's overstayed, right? Corn was cheap. He didn't like the market. Weather's good. These cattle are all weighing a lot. And now it's the opposite. Now we can't wait to sell. We had tough weather through the winter, tough weather through the summer. Feed now is just starting to get a little more inexpensive, but it's been high. These cattle make a nice money. These guys want to sell them. I want to sell them, so that we're all been incentivized to get current, and being current really helps, from a leverage standpoint. So, but I should mention the cash. I thought that the market flipped really for real, about quarter 12, when the South went from 182 to 183. Then there was some reports that there was a bit of 184 in central Iowa. And then even between the close and when you and I started, now I just saw 185 in western Nebraska, which is also a buck higher for the week. So it looks like the good guys are winning this little skirmish anyway. And
the feeder is sharply higher as well to go along with this live cattle trade.
With corn higher, nice leadership, that old saying with, feeders the leaders. I always have a little more confidence in the move, and the feeder cattle show that kind of leadership. Following one of the Nebraska sale barn trades here today, they're certainly getting along. We're really good on their yearling cattle market there today too. So, yeah, just a really, really fun day if you're, if you like being bullish cattle anyway. Market held in a good spot, flipped around outside day. I hopefully there's no news overnight from an outside market variety that cuts the legs out from underneath us. But what a nice way to go home. And all the bull spreads work great too.
So let me ask you this, since you closely watch what all these markets or sale barn markets are doing, where are we sitting heifer wise at this point? Sorry, I had to ask.
It's a great question, because it is the question, I believe, when you're looking at down the road here a ways. And I got to tell you, we had this conversation a 3 months ago, and I said, Susan, it's raining every place in the north. These guys will hold heifers. That's what they do. They're I'm not seeing it. Maybe a little in the north, but boy, not in the south. And still limited by the lack of grass there. And the north, I for every guy that I say, yeah, we're going to save a few extras, I got another guy that says, you know what? I can't afford to turn down the price I'm going to get for this yearling heifer. And even on the cow side, this cow market's higher than a giraffe's dentist. From a relative standpoint, you got guys that, I've had old guys tell me, this is maybe my way out. Maybe I'm going to quit. I can get $2,100 for a cow, whatever. And so now that doesn't make me bearish. That actually makes me think you're going to have maybe one of the longest bull cycle that in terms of a supply bull cycle anyway, that we've maybe had since I've been doing this, where usually we quickly rebuild. This might take us a couple of years to slowly rebuild. It sounds like fun to me. And we'll see what's the demand will determine how much we can bear.
So then won't that keep that packer closer to the knife? Because we're not going to have those replacement cattle. If we're selling cows and heifers, we're not replacing what's going to go into the feedlot next year or the year after as quickly as we might have. Or am I looking at this wrong?
No, you're not. You're looking at it correctly, and it's an inflammatory question. Here's the irony. The industry has decided that now would be a good time to expand our ability to harvest cattle, right? We got these new packing houses try to come online. Interesting timing. I am fearful that the next thing will be a plant closure. I don't hear of one. I don't hear any rumors of one. Relax. But happened in Denison, happened in Longview, Texas, right? I mean, when the numbers get so tight, is a packer just going to go limping along there and merrily? We'll see, especially with increased capacity. If there's not enough to go around, something's got to give.
And we've seen it already happen with the pork plants in the last couple of weeks coming out of, I just had to pull it up, North Carolina.
Right, exactly. Absolutely. So anyway, right now, though, everything feels pretty good. So, but yeah. Hang on to your hat. That's what the great...
We'll end it on a positive note then, and hopefully we can keep this momentum going into next week. So if somebody wants to have this conversation with you a little bit more, how do they do it, Brad?
Well, you can call me 800-358-3047, which is awesome. Otherwise, hook us up on take a look at on our website, kkvtrading.com. We'll help you with any information that you'd like to know too.
All right, as we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.